insurer Stangen from Abil. These plans will help to build a sustainable model and stable, diversified banking system with activities beyond unsecured lending. The Good Bank is set to raise 10 billion rand with the listing. After trading update indicating the bank's future was under threat, the lender was split into Good Bank and Bad Bank with a 26 million rand loan book and a Bad Bank whose loan book was 17 billion rand. South Africa's central bank stepped in to rescue African bank known as Abil over the weekend, and this after the lender said it would need a large capital injection to cover losses from a wave of bad loans. To discuss this, we are joined by Chris Hart, who is Chief Investment Officer at Investment Solutions. Thank you very much for joining us.
My pleasure.
Will this intervention by the consortia of banks, the PICSL, as well as the Reserve Bank, work?
I think it's been very well received in the market, and certainly I think the assets that are going to be listed in the so-called Good Bank, I think will be to have its own investment merits. Let's make, I think, something fairly clear. I don't think the people like the PIC, etc., would be putting more money into something that doesn't have a decent investment or prospect. But it still has to compete in the market, and I think they're looking to create at least a banking unit that has got wider appeal. I think it's also important to understand that the broader society does need more competition, and to have an entity just disappear, I don't think will be good for competition.
Just there, especially to have an entity disappearing like that, let's look at the model of the bank, the way it was designed to operate. Yeah. Was it sustainable?
Well, clearly, whenever you look at a corporate failure, you look at the string of events and the decisions that people made that just didn't work out. The African Bank was well established as an entity. They bought this Ellerines thing. It never really worked and drained the actual bank of its vitality, as it were. And then it, in its business model, then gets exposed for having too few strings on its bow and that kind of thing. So we're looking, in terms of that new bank to actually establish new business lines so that they can actually diversify their profit streams within the bank. And I think that'll be good for the banking sector as more competition comes in and you get an entity that's competing
but
on that basis. But
then talking about competition, what do you make of unsecured lending? Because the business model of commercial banks works quite well because banks borrow money to the creditors, and of course they pay back, and the bank doesn't collapse.
Yeah, I think the unsecured lending has had its moments in the history. You can't just depend on unsecured lending. Look, even the commercial banks were up to, they've got more exposure than that they would like in a downturn. In that unsecured lending is something that seems to work in good times, but really takes institutions down in bad times. And we've seen this in the past. Unifor with ABSA, for instance, they took over that micro lend at that stage. It didn't work. It was also unsecured lending effectively. And, whatever you call it, though, that type of lending is quite high risk, and one needs to have it as a small proportion of your business, not the main portion.
There, Chris, there's this notion of good bank, bad bank. Yes. Can we just explain what it means?
Well, what happens is that in any banking book, they've lent out money. Now, the moment the loan that they've lent out, it starts going sour. In other words, the person you've lent it to or entity you've lent it to is not paying back regularly. They've defaulted on some of their obligations, etc. That debt is starting to go sour, and you have to start making provisions in the books to do so. So what you're doing is it's effectively splitting the assets. Those that have got distressed credit, and that's the bad bank, and the good bank would sort of have a clean bill of health. In other words, quite a healthy loan book.
The performing loans.
Right, the performing loans.
Okay.
And so the bad bank is effectively not there to be in operations perpetually. All they're doing is to say, can we now manage this bad loan book and try and at least recover the loans So it's not as if that if you borrowed money from African Bank, you say, yeah, it's folded, I don't need to pay my debts back. This is an entity that is going to pursue you.
Pardon my interruptions because I'm hard-pressed for time. The issue of the Reserve Bank governor saying that there won't be any payment holidays for defaulters.
Exactly.
They have to
pay.
But then what is it in for the consortiums? What do they stand to benefit?
Well, basically, let's put it this way. There's been a catastrophic loss for the previous shareholders of the capital holders of the banks because they've lost the entire capital there, and there's been significant asset managers that have had stakes, the PIC being one, Coronation, etc., and you can go through them. They're sitting with a big loss, but we're trying to rescue the good assets to say, in this thing, there is a good business still that one can actually utilize and see if we can salvage something so people don't lose jobs and that type of thing. And then you, of course, got to salvage the bad loan book. That doesn't mean that people get off scot-free. They do have to pay their loans back.
Just very briefly now, what's going to happen in the meantime to wholesale depositors and investors who lost their money and those who believe that the market will recover? Because those who have confidence in the share that has dropped, that it's going to pick up.
Well, the main thing is to at least preserve the integrity of the depositors. There's a lot of money market funds that would have exposure to African Bank through holding instruments that they would have issued, and even through credit-linked notes, which even other institutions would have issued. Does that remain good and tradable in the market? And that is important.
So we won't see a Sambo scenario here.
No, Sambo was also a slightly different scenario, but again, Sambo is, in the same sense, probably was a policy mistake to let them go without any rescue plan. And I think at least this redeems this to a certain extent.
All right. Thank you so much for making time to see us.
My pleasure.
All right. Chris Hart is Chief Investment Officer at Investment Solution. Of course, I'm packing the details about this intervention by the consortium of banks, the IPC, as well as the Reserve Bank, to bail out African Bank.